So I want to ask you about how, in your research and in your studying of these different worlds that you've studied, right, from central banks to hedge funds to venture capital industry and so on and so forth, how have you seen the relationship between these players evolve over? You can pick the time frame over the last few couple of decades, if that's interesting, or over the last couple of centuries.
Well, let me talk broadly about the last 100 or so years in the United States. I mean, if you look at the cycles, you clearly see that there are moments when, finance gets too chaotic and then the government clamps down. So, there'd been this period right at the 1900s where there was no central bank and private banks were running amok and creating way too much credit, and there would be a bubble and then it would burst and everybody would lose money. And there was no central bank, so there was nobody to bail out the system. And JP Morgan, who I mentioned before, would sort of do it privately by convening people in his library and locking the door until they all agreed on a way of sharing the pain of bailing out the system. But that didn't seem like a sustainable model, and that's why the Federal Reserve was created.
And these people at that time were politicians, or were they fellow bankers?
They were the heads of the various banks on Wall Street.
Okay.
But, there was no way of coordinating a bailout unless you had the most powerful of those bankers sort of step in and go from essentially being a private banker to being a kind of public leader. And so they kind of formalized that idea by creating a proper public institution, the central bank, to act as the lender of last resort, to step in when there was a crisis, to stand behind the banking system when that was necessary. So you had a regulation of money in that sense. Then you get another period of wild excess in the 1920s with an enormous stock market bubble, which then becomes a crash, all sorts of unsavory practices, fraud and so forth being practiced during that bubble. And as a result, the government clamps down, creates the Securities and Exchange Commission, and regulates finance, which is then sort of fairly quiescent and dormant after the Second World War through the late 40s, 50s, and 60s. And then, there are various loopholes that are discovered in the SEC regulation. Finance starts to get a bit wilder again. The regulation had some inefficiencies, so the politicians allowed that wildness to build. And it builds and builds and builds. You get securitization, you get all kinds of derivatives, you get way more leverage in the American economy than you had ever had before. And that all comes to a head in 2008 with the financial crisis. And then again, the government bang comes in, clamps down, imposes new regulations, and sort of tames finance, makes it more boring. So I think you see these cycles between the government's tolerance of financial innovation and then periods of intolerance.
No, so I think that's a great description of you can call it the ebb and flow, as in a previous podcast conversation we termed it, or you can call it the tug of war, which is the title of a chapter, incidentally, as you were talking about this back and forth, right, where finance gets more adventurous and then the government tries to tame it. The story sounds eerily similar to how you might today describe the tug of war, at least how I've described it, the tug of war between big tech firms and governments, right? Where there seem to be, much like we're seeing in the world of AI as well. We saw it with social media over the last few years, where big tech firms tend to use whatever flexibility they have in the system to push the boundaries, and at some point they run into the state or the government saying, "Hey, listen, now you're overstepping, and time to tame you, or time to regulate you, or time to call you to congressional hearings, and please give you a mouthful even if we don't break you up." Do you see those similarities between how finance was being tamed over the last decade and went through these cycles, and maybe how governments and tech firms are now, maybe playing a similar tug of war?
I mean, I think you're right. There is a similarity. I think the distinction would be, though, that finance, when it goes wrong, can be, systemically problematic in a way that I'm not sure tech has ever been so far. So what I mean is that, in the 1920s, the excesses created the Great Depression, and people were, absolutely lost their livelihoods, and it was huge amounts of human suffering. In 2008, the world economy crashed. Hard to think of a tech thing which, sure, it's caused problems with privacy, it's caused problems with
Elections.
There have been serious effects.
Yeah.
But I don't think it's caused a really acute recession ever. So maybe the sort of swings are more extreme with finance.